Chalo, let's start with the super quick revision of the last chapter of customs, that is importation and exportation of goods. Okay, this is under custom. Here we are going to study the procedures for importation, procedures for exportation. We will study about baggage provisions here. We will study about transit and transshipment. We are going to study about postal articles. We are going to study about ship stores. Okay, so these six things we are going to deal in this particular chapter. Major part of the chapter is going to talk about the importation, which is going to be a theoretical part. Okay, let's try to revise the most important things in the chapter, which is very relevant from your exam point of view. Now, as you already know, when we talk about importation of goods, okay, importation of goods means bringing the goods into India. Okay, whenever the goods are brought into India, at that time, can we say the goods can come into India by way of sea, that is waterways, vessel, okay, or the goods can come into India by way of aircraft, or the goods can come into India by way of land route, that is by way of vehicle, etc. So whenever this is coming, okay, let's say when a vessel is coming, a ship is coming, so can we say there will be a person in charge of that vessel, that is the master of the vessel. Okay, similarly in case of aircraft, there will be a commander or there will be a pilot, right? Similarly, in case of by land, etc., when a vehicle is coming, then there will be a driver, or when it is coming by railways, even that is considered as by a land route only. So there will be some person, person who has got the chief direction of the train, etc. So these people, okay, just like I mentioned, master of the vessel, pilot of the aircraft, driver of the vehicle, etc. Can we say they will be vested with some big responsibility because they are bringing something here into India? Right. So first one, section number 29 says that whenever any vessels or whenever any aircrafts come here into India, it is the responsibility of the person in charge of that particular vessel or aircraft to land that particular aircraft, or to berth, that is kind of park that vessel only in designated customs port or airport. Okay, means only in the specified customs port or airport only you can bring that particular vessel or aircraft. But sometimes it can so happen that it is because of some maybe natural calamity or because of any other reason, it is not possible to land or to berth the vessel or the aircraft in the customs port or airport. Then maybe because of accident, maybe because of bad weather, etc. Then in such case, the person in charge of the vessel can berth it at some other place other than customs port or airport. But as soon as he parks there, he will have to inform to the nearest customs officer and to the officer in charge of the police station that we have not parked at, or we have not landed at the customs port or airport. This was not the place where I should have come, but I have come here because of these exceptional reasons. Right. And till the time the customs officer does not check it and all those things, till that time unloading of goods is totally not allowed, and any passengers who are there in the aircraft or who are there in the vessel, those persons cannot move outside the vicinity. Okay, they cannot move outside the vicinity till the time the officers inspect the goods and the passengers. Yes, but again, let's say because of any health reasons, or let's say because of any safety reasons, or let's say just to save their own life, if they are required to move out of the vicinity, then that can be allowed, but again only in exceptional circumstances. Okay, then section number 30 mainly talks about three documents. One is your arrival manifest, second one is your import manifest, and third one is your import report. Just try to understand arrival manifest. First of all, this manifest or report is just a report. Okay, it is going to be a document which is going to contain all the details about who have come into India, what goods have come into India, and all those, from where it has come, description of the goods, and all those things will be written in this particular document. Okay, ma'am, is there any difference between all the three? Yes, there is a difference. Arrival manifest is supposed to be used whenever passengers are coming into India. Import manifest is to be used whenever there are any goods coming into India by way of vessel or aircraft. And import report is required to be used when the goods are coming into India by way of land, by way of road, etc. Okay. So the person in charge, again the responsibility is on the person in charge. The person in charge is required to prepare this arrival manifest, import manifest. Import manifest is also called as import general manifest. So import manifest or import report, he is required to prepare it and he has to give it to the customs officer. Okay, when we talk about this thing, arrival manifest and import manifest. Okay, when we talk about the first two documents, they are telling that this needs to be filed with the proper customs officer electronically. Okay, electronically anytime prior to arrival of the vessel or aircraft. Means before the aircraft or the vessel comes into India, before that you are required to file it. But in case of import report, which is used in case of land, in that case they say that you can do a manual filing in that after the vehicle has come into India. Once it has come into India, from that time, within a time period of 12 hours, okay, maximum within a time period of 12 hours, you have to file this import report with the proper customs officer. If you do not do it, then you will be liable for a penalty up to rupees 50,000. Sometimes it can so happen that because of some sufficient cause, because of some good reasons, you could not file these reports, manifest, etc. within the time specified. So if the reason is a genuine reason, then the delay can be condoned. Then sometimes it also happens that this manifest, this report, etc. contains some wrong information, and we are able to prove, the person in charge is able to prove that we did not have any fraudulent intention of writing something wrong there. And if the officers are satisfied, then they will allow you to do amendment in the manifest or the report. Are you clear with this? Okay, then we studied about arrival manifest. Okay, similarly, can you see here passenger and crew arrival manifest? Okay, passenger manifest we just now saw, that was called as arrival manifest, and similarly crew members of that particular aircraft or etc. This is also required to be prepared under section number 30A. Okay, time limit we have already studied about, that is required to be submitted anytime before arrival of the vehicle or the aircraft. And this passenger and crew arrival manifest is going to contain all the information about the crew members, about the passengers, their record information, their journey information. This is required to be submitted any time before arrival of the aircraft or the vessel. If not done, then there can be a penalty up to rupees 50,000. Are you clear with this? Yes. Then going on to the next section, that is section number 31. Section number 31 is specifically applicable only to vessel. Okay, only to vessel. Here they are telling that till the time the customs officer does not give an entry inwards. Okay, till the time it does not give an entry inwards, the master of the vessel, since we are talking only about vessel, so the master of the vessel is not allowed to start the unloading of the goods. Okay, only when the proper officer gives the entry inwards, only then unloading of the goods can be started. Are you clear with this? Okay, date of entry inwards, that was relevant even for the purpose of section number 15 if you recollect. Yes, section number 15, rate of duty will be taken as on the date when the vehicle is entering into India. Entry inwards is given, or filing of bill of entry, whichever is later, right? Then after that, next three sections are very simple. Section number 32, 33 and 34. Section number 32 says that if there are any goods which are not mentioned in the import report or the manifest etc., then you are not allowed to unload it. Okay, we don't want goods here. Okay, next section number 33 says that whenever any unloading is happening, in case of import unloading will happen, and in case of export loading is going to happen. So this should be done only at the proper custom port or airport. Right, and the last one is section number 34. Section number 34 says that whenever the goods are being unloaded or whenever you are loading the goods in the time of export also, okay, then that has to be done only under the supervision of the customs officer. Then going on to the next section, that is section number 35. Section number 35 talks about the boat note. Okay, now we had studied about this in the last chapter also. Let's say there is a particular vessel which has come into India, and maybe because of the size of the vessel, or maybe because of any other reason, it is not possible to bring that big vessel up to the custom port. Okay, so in the mid sea itself, we are going to stop that big vessel, and from there the goods will be put into small boats. Okay, the goods will be transferred to the small boats, and these boats will then bring the goods to the port. Okay, when you are bringing the goods via these small boats to the port, then that transport should be accompanied by the boat note. Otherwise the goods cannot be waterborne. Okay, goods cannot be waterborne means the goods cannot be kept in that small boats, and it cannot be brought then till the shore. Are you clear? Till the customs port. Are you clear with this? Okay. Then there are some general pointers. Okay, there are some general pointers that they have told. Whenever loading or unloading happens at the customs port, airport, etc., then they are telling it cannot be done on Sundays, it cannot be done on holidays which are observed by the custom department, and on normal days it cannot be done after the working hours. Okay, but in some exceptional circumstances, on payment of overtime charges, maritime overtime charges, the loading or unloading can be done during off hours also. Okay, maritime overtime charges we had done in GST also, I think. Yes, that whenever we pay this maritime charges to the customs department, there is no GST applicable on the same. I hope you are able to recollect it. Yes, now the proper officer also has the rights. Okay, he has also got the right that he can board any particular conveyance. Okay, he can enter any vehicle, he can enter any vessel, he can enter any aircraft and stay there for whatever time, maybe for the obviously for the purpose of examination of the goods and all that. He can stay on that conveyance for whatever period he wants to stay, and if he wants to ask any questions, doubts, etc., he is free to ask all those things. Are you clear with this? Yes. Now, starting with section number 45, which talks about the procedure. Okay, now we know that whenever the goods come into India, now let's say entry inwards have been granted. Okay, if entry inwards have been granted, then after that the unloading of the goods are going to start. Okay, when the goods are unloaded, goods will be unloaded on the port. Yes, then the goods will be in whose custody? The goods will be in the custody of the custodian. Listen, the goods will be in the custody of the custodian who is approved. Okay, who is approved by the principal commissioner or commissioner of customs under section 45. He is the person who will have the custody of your goods, and if there is any pilferage, we have already studied this earlier, if there is any pilferage while the goods are there in the custody of the custodian, then such private custodian who was approved by the principal commissioner or commission, that person will be responsible to pay the duty on such pilfered goods to the revenue. Right now, there was one important point here that was decided in one case law also, that in India, in major ports, the port trust is the custodian. Okay, port trust is the custodian. So port trust is not the custodian who is approved by the principal commissioner or commissioner. Okay, so if there is any pilferage that is happening, on such a port which is under the control of port trust, then the port trust will not be responsible to remit the duty on such pilfered goods. Are you clear with this? Yes, this is what we have studied. And yes, now let's say if there is such a port where there is a custodian who is approved by the principal commissioner or commissioner, then is he liable to remit the duty, or is he liable to pay the duty on those pilfered goods? Yes, he will have to pay the duty on those pilfered goods to the department. At what rate or on which date's rate will be considered? The date on which that import manifest or the import report or the arrival manifest was filed. Okay, on that date, whatever was the rate of duty, at that rate we are required to pay the duty to the government. Okay, an example is also there, and the reference of the case law is also given here, Board of Trustees versus Union of India. You can just refer it once. Then going on to the next section, that is section number 46. Okay, section number 46 talks about filing of bill of entry. Very, very important. Okay, now bill of entry is required to be filed. Okay, we have to, whenever any goods are going to be unloaded here, okay, for that purpose we need to file the bill of entry. Okay, so bill of entry is not required when the goods are going to be in transit, means it is going to go to some other place, or when the goods are going to be transshipped, means the vessel of the goods are going to be changed. In that case, anyway, you are not going to unload the goods at this port. Okay, so for that bill of entry is not required. Otherwise, for all the goods, bill of entry will be required. And now this will be whose duty? It will be the duty of the importer, or it will be the duty of his agent to file this bill of entry electronically for the purpose of clearance of goods on this portal of IceGate. Okay, now ma'am, what is this bill of entry? Bill of entry is actually basically a document, assessment document kind of a thing, in which the description of the goods, quantity of the goods, rate of duty applicable on such goods, everything will be written in that particular document. This will be prepared by the importer. Okay, generally we file it online. This will be prepared by the importer and this will be submitted to the proper officer. If the proper officer assesses it, then this becomes an assessment order. Okay, there are different bill of entries. Like let's say if we are importing the goods and clearing it for home consumption, there is a form 1 in white, which is going to be the bill of entry. Okay, let's say we are going to take the goods to the warehouse into bond bill of entry. So for that there is a form 2 yellow bill of entry, and let's say we have deposited the goods into warehouse and now we want to clear it for home consumption. For that there is a form 3 green color bill of entry. Are you clear with this? So this bill of entry, is going to be prepared by the importer. He will make sure that this is accurate, this is correct, this is not fraudulent, this is authentic, this is valid, and along with the bill of entry, we will also submit the copy of invoice and any other documents which is required. Right? So this is that particular bill of entry that we are required to file with the customs authority. And when are we supposed to file it? So they are telling it, suppose if the vessel or the vehicle is or the aircraft is going to arrive today, then preceding day, okay, the day before this day, by that end of the day, you are required to submit it electronically to the proper customs officer. Let's say the goods are going to come today, let's say on 5th of April, then by 4th April end of the day, the bill of entry should be submitted. And in some cases, the bill of entry can also be filed even more in advance, but during the last 30 days. That is, if we are of the opinion that my vessel, vehicle, etc. is going to come to India within 30 days, then I can file this bill of entry in advance. Are you clear with this? And yes, if you file the bill of entry late, then for that there are late charges applicable for presentation of bill of entry. Right? Now, as soon as you file the bill of entry, now can we say assessment is going to start? Okay, so now there will be, first of all, under GST, under customs, all the duties are self-assessed. That is, the importer is going to do the self-assessment, and on that basis, it has filed the bill of entry. Okay, once the bill of entry is filed, after that the goods are examined. Okay, the customs officer is going to examine the goods, that yes, the goods which have actually been imported, are those mentioned in the import manifest also, and are those mentioned in the bill of entry also? If yes, then the proper officer will say that well and good, no problem, you can pay the duty and then you can clear the goods. Okay, this is the normal fundamental thing that happens. First filing the bill of entry, then after that examination of the goods, and then payment of duty, and then clearance of the goods, right? But now there is something called as green channel clearance facility. Okay, this green channel clearance facility is given to some big importers, where they say that, okay, you are very big importers, we trust you, so what you can do is you can file the bill of entry normal even before arriving of the conveyance, etc., and then we will not do the routine examination of your goods. None of your goods will be opened here at the port, and we are not going to do the examination. You can pay the duty and you can clear the goods. We do not have any problem. But yes, obviously, suppose if there is any case of, case where we feel that physical examination is necessary in case of this big importers also, then that can be ordered, right? Okay, so this is how it goes. Now, sometimes it can so happen that I do my own self-assessment of customs duty, but the proper officer is not satisfied. So the proper officer can, after doing the verification, examination, etc., it can do reassessment of duty, and then whatever is the differential duty, suppose if I have paid more amount of duty, then that will be refunded back to me, or if I have paid less amount of duty, then in that case I am required to pay the difference. Okay, if I still don't agree with the reassessment order passed by the proper officer, then in that case, I'm left with no option. I have to listen to the proper officer, and the proper officer will pass a speaking order, a detailed order, that why he has done such a type of assessment. Are you clear with this? Yes, this is your normal assessment. Generally, this is how it gets over. Then in some circumstances, there is a concept of provisional assessment that is applicable. Okay, what happens in case of provisional assessment? In case of provisional assessment, let's say if the importer or the exporter is of the opinion that he is not able to do the assessment. Okay, he is not able to do the self-assessment. He is not understanding, maybe he does not know the classification of goods, maybe he does not know the rate of duty, etc. So he requests to the proper officer, sir, you only do this particular assessment. Okay, so he can do provisional assessment. Or where the proper officer is of the opinion that these goods must be tested, means maybe some physical test, chemical test, etc. is required, then it will do provisional assessment of duty. Or if the importer or exporter has not submitted the proper documents which was asked by the officer, or if we have submitted but still the proper officer is not satisfied with our documents, in such cases it will initially complete the provisional assessment. Okay, when it does provisional assessment, basically it will calculate the provisional value. On that provisional value, I will pay the provisional duty. Okay, I will pay the provisional duty, and then the proper officer will also estimate how much can more duty arise. So for that excessive amount of provisional duty, estimated excessive provisional duty, I am required to submit a security to the proper officer that suppose if the tax liability increases, then at least the revenue is safeguarded. Okay, the department is safeguarded, right? Then once after that your provisional assessment is done. Okay, once your provisional assessment is completed, then after that your assessment, once your provisional assessment is finalized, okay, at that time you will come to know about the final duty. Okay, so whatever is a differential duty which is unpaid, for which you had given the security, that much amount you are required to pay along with interest. Are you clear with this? Okay, how much interest, ma'am, or what will happen? Suppose if I have already paid more during provisional assessment, then in that case, whatever is the excess amount that I have paid, I will get it as a refund. Are you clear till here? Okay. Now listen, this is interest percentage etc. I have not told you yet. Okay, now listen, another thing, let's say if provisional assessment was done and now reassessment is being done, or assessment is being done now by the proper officer, or we can say finalization of the assessment is now being done by the proper officer. Then in that case, suppose if the goods are going to be cleared for home consumption, okay, then whatever amount I had earlier paid as provisional duty, can we say that amount will be adjusted now, and whatever is the difference that I am required to pay, or if I have paid more, then I will be eligible for refund. This is what we had discussed. Okay, one extra thing here, let's say if there are some goods, let's say these goods for which provisional assessment is going on, these goods are warehoused. Okay, these goods are already warehoused. Then can I say I would have already given a bond for these goods? Yes. So now I did not pay the duty because the goods are under warehouse. So duty is not paid. So they are telling that whatever is the duty which is finally assessed, okay, minus the provisional duty. Okay, whatever is the final duty minus the provisional duty, means if there is some more amount of tax which is payable, for that amount, twice that amount, okay, twice of that amount, I have to give a bond to the customs officer. Okay, let's say provisionally assessed duty was 1 lakh rupees and the reassessed duty is equal to 1,50,000 rupees. Okay, and the goods are kept under warehouse. I am not required to pay the tax now. So what is the difference? How much extra am I supposed to pay now? I have to pay 50,000. So 50,000 into 2. 1 lakh rupees. Please give a bond of 1 lakh rupees to the customs officer as a security for the warehoused goods. Are you clear with this? Yes. And whenever the duty is finally assessed, okay, whenever the duty is finally assessed, if there is any shortfall in payment, then I am required to pay the interest on the shortfall amount of tax. That interest meter is going to start from the first day of the month. From the first day of the month in which provisional assessment was done. Okay, let's say provisional assessment was done on 15 December. So the interest meter is going to start from 1st of December. 1st of December till the date of payment of this tax at the rate of 15%. 15%. This will be the interest that will be payable in case of provisional assessment of duty. And suppose if you have already paid more amount of duty, then whatever is the excess amount you have paid, can I say you will be eligible for a refund? Yes. So they are required to pay you the refund within a time period of 3 months from the date of final assessment. Whenever final assessment happened, from that day within 3 months, I should get the refund. If I don't get the refund within 3 months, then from the next day onwards, after 3 months, from the next day onwards, I will be eligible to interest at the rate of 6% till the date I get the taxes back. Are you clear with this? So when interest is payable, we have to pay interest at the rate of 15%. When the amount is refundable, at that time we will get the interest at the rate of 6%. Yes, and whatever refund you are getting, this is subject to the provisions of, subject to the principle of unjust enrichment. That is, you will be getting the refund only if you had borne the burden of that particular tax. If not, then the refund will be credited to the consumer welfare fund. Are you clear till here? Yes. Then they had to, then for the purpose of, in this provisional assessment regulations, they had told you, for the purpose of provisional assessment, can they ask for certain documents, specific information from you? Definitely yes, and you are required to furnish it within the specific time. Once you furnish all those documents etc., after that, from that day, okay, whenever you submit the information to the proper officer, from that day within a time period of 2 months, the provisional assessment should be finalized. Okay, means whenever you submit all the necessary information to the officer, from that day officer has got a time period of 2 months to complete your provisional assessment. What if you don't submit the information at all? Then whatever was the last day of submitting the information to the proper officer, from that day within 2 months he is going to complete the provisional assessment. Okay, and this time period of 2 months can be further extended by another 3 months. So 2 months plus 3 months is a total time period for completing the provisional assessment or for finalization of provisional assessment. Are you clear with this? Yes, and if the importer or exporter or his broker etc. contravenes any of the provisions of this provisional assessment etc., then they will be liable for a penalty up to rupees 50,000. Are you clear till here? In our textbook itself, in question bank also, and in the main book also, there is an example on numerical calculation of interest. Please do try it, because it is important from exam point of view. We have got questions on that part before. Okay, then going on to the next one, that is customs audit. Now, can audit be done under customs law also? Answer is yes. Okay, it is not a mandatory every year audit. No, it is not that. But it is a special audit which can be done by the customs department, not even CA. Okay, which will be done by the customs department. Now, audit can be done of the importer, of the exporter, of his broker, of the customs agent, of the licensee of the warehouse. Okay, so these all people, any of these people can be the auditee. Okay, and whenever the audit is going, this is not going to be a surprise audit. Okay, this is going to be a planned audit only. So auditee is required to preserve all the records for the purpose of audit for a period of 5 years. Then depending upon certain parameters, some people will be chosen. Okay, some people will be chosen for, some auditees will be chosen for the purpose of audit. And whenever this audit is scheduled by the audit commissionerates, okay, I have written here, can you see this? This audit is done by the audit commissionerates. So whenever they decide to go for audit, they have to inform the client 15 days in advance that their audit is going to be done. And this audit commissionerate can take the help of experts like CA, ICWA, IT professional, etc. But otherwise, CA, CWA does not have any other role here in customs. Okay, plus the executive custom commissionerates. Okay, executive custom commissionerates shall also assist the audit commissionerates for the purpose of doing the audit. Now, these audits are of two types. Okay, these audits are of two types. First one, normal audit, is going to be your transaction based audit. Okay, transaction based audit means what? Means a particular transaction is going to be, or a set of transactions are going to be audited. Okay, but this can be further converted. Means if they want to go more into detail, then this transaction based audit can be converted into premise based audit. Premise based audit means all the transactions will be checked. Import, export, other things will be checked. Then their financial statements will be checked, so that we will get a full overview. Means if there is something which they are hiding, then by checking all of this together, we will be able to do the audit in a proper manner. Are you clear with this? And this audit is done by whom? This is done by the audit commissionerates. Above audit commissionerate, you have got the chief commissioners who are going to keep an eye on the audit commissionerates, that whether the audit is being done properly or not. Means whatever audit reports were submitted, out of that 5% of the audit reports will be chosen, and then that will be checked by the chief commissioner, that whether they are doing it properly or not, or whether they have done it properly or not. Are you clear with this? Yes. Then going on to the next section, again coming on to the series of 40s, section number 47, which talks about clearance of goods. Okay, now if the proper officer is satisfied that the import manifest etc., everything is proper, then your bill of entry has been filed, then the goods which have been imported are not prohibited goods, and whatever was the taxes due, those taxes have been paid. Then by this time the goods are already on the customs port. Okay, so then they will allow you to do the clearance of the goods. Okay, but yes, clearance of the goods can be done only if full taxes have been paid. Okay, that you have to keep in mind clearly. Okay, in some cases, in 2 cases, deferred payment is allowed. That is, clear now, pay later. Okay, you can take the goods now, but you can pay later. It is allowed in two circumstances. One is in case of importers who are certified by the CBIC. Okay, under the Authorized Economic Operators Program Tier 2 and Tier 3. Okay, this is a particular program which is run by the CBIC. So those importers can first clear the goods and later they can do the deferred payment. And even some authorized public undertakings, public sector undertakings. Okay, these entities are also allowed to clear the goods first and then they can do the payment. Are you clear with this? Yes. Now, this is for the deferred people. What about normal people? By what day are they required to make the payment of the import duty? So whenever we went for self-assessment, okay, and the day when we presented the bill of entry, on that day, everything was anyway written in the bill of entry. Whatever amount we had computed, we had self-computed, that amount we have to pay on the date of presentation of bill of entry. Okay, or next, let's say in case the officer plans to do a assessment of the amount which I had paid, or it has done reassessment, or if it is a case of provisional assessment. So can we say he will do the corrections in my bill of entry and he will send it back to me? So the day when I have got it back from the proper officer, from that day within 1 day, okay, excluding holidays, from that day within 1 day I am required to make the payment of that import duty. Are you clear with this? If I do not pay, then in that case, interest meter will start at the rate of 15%. Very clear with this? Acha ma'am, what about deferred payment? For how many days the payment can be deferred? So not too much, but yes, some relaxation is given. So let's say if we have got any bill of entry, okay, if we have got any bill of entry returned from the proper officer saying that, okay, go ahead and do the payment, then in that, and if that bill of entry has been returned between 1st day to 15th day of any particular month, then by 16th of that month, please make the payment. So for the first 15 days, during first 15 days, if the bill of entry has been returned, then by 16th of this month, please make the payment. Then for any months other than March, for any bill of entry received between 16th of any month till 31st of that particular month, the payment can be done by 1st of the next month, and in case of March, if any bill of entry has been returned between 16th March to 31st March, then the payment has to be done by 31st March. So basically all the payments will be cleared in the same year itself. Okay, that's why for March they are not taking it to 1st of April, they are clearing it by 31st March itself. And there was an amendment inserted here where they had told that if central government is of the opinion that they should be given some more time, then they will be given that extra time, right? And this payment is required to be done electronically. Okay, that we will study ahead also. By using your electronic cash ledger and other modes, you can do this payment. And now this deferred payment, can we say this was allowed to two category of persons? Is it can we say this is a benefit only given to such type of persons? Yes. Now they had earlier told that if there is any default done, at least if there is a default done, that the payment was not done by the deferred payment due date, and if this default is done more than once in 3 consecutive months, then the facility of deferred payment will be stopped till the time you don't clear the payment along with interest. Are you clear with this? But then later on they amended and they have put it in a different manner. They are telling that these eligible importers, that is that authorized economic operators tier 2, tier 3 and authorized public undertakings, they will be permitted, okay, they will be allowed this deferred payment only if they have paid the duty for the bill of entry within the due date, that is that 16th, etc. And if at all there is any differential duty payable because of maybe reassessment, etc., then that differential duty, for that you will not get extra time period, that has to be paid within a time period of 1 day. Means whenever we got the revised bill of entry or we got the new bill of entry from that particular officer with the reassessed value, from that day within 1 day if you pay, then only you will be allowed to continue this, deferred payment facility, otherwise it will be discontinued. Okay, then whatever amount of custom duty you are required to pay, you have to pay it electronically, and compulsory electronically has to be paid in 2 cases. One is when the importer is authorized or the importer is registered under the authorized economic operator, that same thing, right? And second one, if you are paying for a bill of entry and where each bill of entry is of 10,000 or more. Okay, per bill of entry is of rupees 10,000 or more. If you fall under any of these circumstances, electronic payment on IceGate portal is mandatory. Okay, that is mandatory. That's it. And yes, after payment you need not furnish any proof of payment for clearance of goods, because everything is online. It will be shown on their portal that you have made the payment, and you will be allowed to take the clearance of the goods. Okay, then there is something called as faceless assessment, which I have written it as one time read. Just like your income tax and other laws, now customs is also starting the faceless assessment, where they are telling that your goods will be coming physically on a particular port. Okay, that port's custom officer is not going to do your assessment. Some other port customs officer is going to do the assessment of your goods, which is kept on some other port. Okay, so can we see there is going to be a good independence? My goods are lying at one particular, let's say Mumbai port. Okay, and the faceless assessment is going to be done by a customs officer or a port officer who is sitting maybe at the Kandla port. Okay, so here they are just trying to do such type of things so that efficient utilization of manpower is there, speedily it is done. Then independence, mainly independence is there, bribery things etc are stopped, and all those things. Right, now whenever you are doing the payment, okay, whenever you are doing the payment, they are telling you can do it electronically. Okay, on the IceGate portal you can do it electronically. And when you are doing the payment electronically, you have to keep the amount, you can keep the amount in the electronic cash ledger, just like your GST. You can deposit some amount in the electronic cash ledger. Okay, then that will be credited. Your ECL will be, this is your ECL, it will be credited with the amount that you have paid. And once you want to clear your goods, then at that time you have to pay the custom duty. So you can pay the custom duty out of this deposit amount, by which your electronic credit ledger will be debited. Are you clear with this? Yes, and whatever, if at all there is any amount left in your electronic cash ledger, then you can take a refund of the same, because this is your cash. Okay, this is your cash. This is what is written here. Acha, in some cases, electronic payment is not mandatory. Okay, means you need not do the advance deposit in the electronic cash ledger, etc. They have exempted this. CBIC has exempted in some cases till 30 November 2023 that if suppose your goods are imported or your goods are exported from such custom ports which does not have the facility of automated systems in place, then online payment won't make any sense. Okay, or whenever the goods are imported or exported at international courier terminals, then till 30 November 2023 no need to follow that electronic cash ledger. But from 1st December 2023 they have already notified that you have to maintain this electronic cash ledger. Then in case of baggage, okay, in case of baggage, when the customer is coming along with his baggage, you cannot expect the passenger to have an electronic cash ledger. So in that case the payment will not be done through electronic cash ledger. And then the last one, other than any other circumstances, example, when your bill of entry amount is less than rupees 10,000, then in that case any payment of custom duty, social welfare surcharge, GST compensation cess, etc. This payment can be done by any mode other than electronic cash ledger. Okay, the main purpose of this is they are just trying to make everything online. Okay, just like GST, you know now. Yes, now just like you had your electronic cash ledger, we are also going to have the facility of this electronic credit ledger. That is whenever there are going to be any drawbacks, duty drawbacks under this customs, okay, any refund of the duty which was paid on imported goods, if you're going to get a duty drawback of the same of the goods, okay, or when you will study this FTP, and we had the reference of this earlier also. Remember RoDTEP scheme, any exports done under or any imports done under RoDTEP scheme for the purpose of exports, ROSCTL scheme, etc. Okay, ROSCTL is anyway not there in our syllabus, but if you have done any of these, then in that case also whatever duty you have paid, for that you get a remission. Okay, you get it back. So those amounts will be credited to the electronic credit ledger. Okay, earlier it used to be duty scripts, everything used to be manual. Now they are telling that because in manual there was very high chances of fraud being done, so they are telling that you can this amount will be credited to their electronic credit ledger. Okay, electronic credit ledger, which you can use it for the purpose of payment of taxes, right? Then going on to the next section, that is section number 48, which talks about, suppose if your goods were unloaded on the warehouse, your goods were unloaded on the portal, but you did not clear it for a period of 30 days. Okay, if you're not clearing, it means you did not pay the taxes, so it is not getting cleared. So if you're not able to clear it within 30 days plus further period of another 30 days, then in such cases first 30 days or within some extended time period, sorry. Then in such cases, the proper officer, after giving you an intimation, he can sell the goods by way of auction. Okay, if he is selling the goods by way of auction, there will be a bidder who will be informed that you are going to be the further owner of these goods, and the department is going to collect the customs duty on the same from those goods. Okay, and suppose if those goods which are under auction, if those goods include animal, foodstuffs, hazardous goods, perishable goods, etc., then the department need not even wait for a period of 30 days, and then it can start the auction of the same, right? Then going on to the last section, that is section number 49 here. Okay, last section here. Going on to section number 49, which says sometimes it can so happen that the goods have come. Okay, you don't want to take the goods to warehouse, whereas you want to clear the goods for home consumption, but you are not able to clear it within reasonable time. Okay, maybe you are not able to prepare the bill of entry. Maybe the department is not ready to do the provisional assessment. So because of that, you are not able to clear the goods within a reasonable time. In such case, okay, in such cases, you can request the proper officer that, sir, till the time we come to know about the same, can we keep it in the public bonded warehouse? So the department can allow you to keep the goods in the public bonded warehouse, but this is not these goods cannot be called as a warehoused goods, because here we are keeping it in the warehouse only for a very smaller time period, only for a temporary period, because we are not able to get the goods cleared. So warehousing provisions will not apply to such goods, and this concept is called as warehousing without warehousing. Are you clear with this? Yes. And the goods can be kept in this public bonded warehouse for a period of 30 days plus another 30 days maximum, right? Okay, then after that, okay, so importation gets over here. Now going on to exportation is also more or less similar. Now in this case, in case of export, which documents are required? Just like in case of import, you had the import manifest, import report, etc. In case of export, when you are exporting the goods, by ship or aircraft, at that time you need a shipping bill, and when you are exporting the goods by land, at that time you need the bill of export. Okay, these documents, shipping bill, bill of export, is required to be filed by the exporter again online. Okay, but before filing the shipping bill or bill of export, first you should be having an entry outwards. Okay, proper officer should first grant you an entry outwards for your particular vessel or aircraft. Then only you are required to file the shipping bill, and then only the goods will be loaded, and all those things is going to happen. Okay, this shipping bill will be prepared by whom? Shipping bill or bill of export. This will be prepared by the exporter. Okay, there also bill of entry was prepared by the importer. So here also shipping bill, etc. will be prepared by the exporter. Okay, but till the time, in case of vessel, till the time entry outwards is not granted, till that time you cannot start the loading of goods in the vessel. Okay, so ma'am, can you tell us what is the sequence actually? The sequence is, first of all, the officer is going to grant you entry outwards. Okay, he will grant you entry outwards. Once he grants you the entry outwards, after that you will file the shipping bill. Once you file the shipping bill, bill of export, he will check everything, you will pay the duty, then he will pass the let export order. Okay, and once he passes the let export order, then in that case you can do this particular export. Are you clear with this? Yes. Then after that, the next section, that is section number 51, which talks about clearance of goods for exportation. Clearance of goods means what? Clearance of goods. Just like in import also we had clearance for home consumption. Similarly, here clearance means the goods can be taken outside the country. So as soon as once the entry outwards is provided, then the shipping bill is filed. If there is any duty payable, because not on every export the duty is payable, so if the duty is payable on that export, you are required to pay the export duty, and after that the officer will say, okay, let export. Okay, once he gives this let export order, then the goods can be cleared, means the vessel can be taken outside the means the goods, the loading of the goods can start in that particular vessel. Are you clear with this? Yes. Then after, suppose if there is any short export of goods, means what you had written in the shipping bill, that much quantity was not exported, something lesser than that was exported, then within 7 days from the date of departure of the vessel, aircraft, etc., you just inform it to the proper officer that there was some short export of goods. Yes, and till the time that let export order is not passed, okay, till that time you cannot start the loading of goods in your particular conveyance. Very clear with this? Okay, this is who, till here it is whose responsibility? Till here it was the responsibility of the exporter. Now, will there be any responsibility on the person in charge of that conveyance also? Yes. Okay, now listen, once that let export order is passed, after that loading of goods is going to start in that conveyance. Yes, loading of goods will start. Then now the responsibility is going to vest on whom? Now the responsibility is going to vest on the master of the vessel, pilot of the aircraft and all those things. And he is going to prepare which document? He will prepare the departure manifest, export manifest or export report. Now you can link it now. Departure manifest, just like your import, just like your arrival manifest, this will be there for the purpose of passengers if you are taking any passengers outside India. Then similarly for goods by way of vessel or aircraft, we are going to prepare export manifest, and for export by land we are going to prepare export report. Okay, so person in charge will before the departure of the conveyance, he will prepare this and he will deliver it to the proper officer. He will do it electronically, right? He will do it electronically and he will submit it to the proper officer. If he does not do it, up to 50,000 penalty will be applicable. If there is any delay in doing it, but because of some sufficient cause, then it will be excused. If he has forgotten to mention something in the manifest, etc., and that was done without any fraudulent intention, no problem, then even that will be excused. Are you clear with this? Yes. And for the purpose of passengers, same thing. For the purpose of passengers and crew, all their information, all their journey information will also be submitted to the proper officer. And until unless you have got a return order, or till the time you have got a return order from the proper officer, till that time your conveyance cannot leave the country. Okay. Now ma'am, is there a possibility that we don't get a return order? Yes, there is a possibility. Let's say the person in charge did not submit the documents properly, or let's say the person in charge could not answer the questions which was asked by the officers, or the shipping bills etc. was later found to be defective, or there was some duty which was payable. In such cases, we will not allow the vessel to, we will not allow the conveyance to move. In fact, what we will do is, we can even order the goods to be unloaded back. Okay, or if it is not possible to unload the goods, maybe because of any volume reasons etc., then we will ask the person in charge of the vessel to give a bond that you will not take the goods outside the country. Okay, this will happen only in which cases? This will happen only in such cases where there was some mistake, okay, where there was some fraud that has happened. Are you clear till here? This was all about your exportation proceedings. Now going on to the last few parts of the chapter. Here we are talking about the postal articles, post or courier. Now, can there be a possibility that we are importing certain goods? By way of post. Yes, so on that also import duty is payable. Okay, for that purpose, whenever this import is happening, at that time the post authorities, okay, the postal authorities are required to file a list of all the goods which have come by way of import to the proper officer. The day when they are submitting it to the proper officer, we have no role in that. Every work is going to be, all the work are going to be of the postal authorities. So when the postal authorities are submitting it to the customs officer, on that day, whatever was the rate of duty, that will be applicable for the purpose of payment of custom duty. Okay, so what if the vessel has arrived earlier? Okay, what if the vessel or what if the aircraft has arrived earlier and then they are going and filing, the list of the particular goods, then also whichever is later. Okay, whichever is later. See, there is a possibility that postal authorities go and file that list earlier with the customs authority because they have got the information electronically that what goods are going to be imported. So, irrespective, when they go and file it, okay, when they go and file that list, whenever they are going and filing the list, or the date of entry inwards of that particular vessel, whichever is later will be the date on which we are going to determine the rate of custom duty. Okay, similarly for the purpose of export, if we are exporting any goods by way of post, then in that case, the day when we hand over it to the postal authorities, that sir, these are the goods which are to be exported, that is the rate, that is the relevant date for determining the rate of duty. Are you clear with this? Yes. Then going on to the next one, that is stores. Okay, ship stores. Now there are certain items which are kept in the ship, okay, which are kept in the vessel or which are kept in the aircraft, okay, which is not for the purpose of international trade but which is for the purpose of using it. Example, medicines can be kept, some food articles can be kept, food articles can be kept, or there can be some life-saving machines or life-saving jackets, oxygen cylinders, etc., which can be kept in the ship, which can be used immediately or later, or as a safety purpose we can keep it in the ship. Now let's say if these items are coming, if there is a vessel which is coming from outside India, and if these items are kept in the vessel, then can we say theoretically, since the ship is now going to come into India, means we can say that along with the goods, even the stores are imported into India. Yes, but now they say that these stores can be imported duty free, provided these stores are again going to go outside India. Okay, if it is coming from outside, let's say there is a vessel which is coming from outside India, which is bringing stores with itself. Okay, and then this vessel is again going to go back to its own country, to the other country. Then in that case, again, now you will say that this is export. So this can be done without payment of duty. Are you clear with this? Yes. Acha, sometimes it can even so happen that when they are imported, then after that we keep the stores in the warehouse. Okay, without payment of duty, and when the vessel leaves India, at that time we are going to provide them with these stores. At that time also there will be no duty that will be applicable. Yes. Acha, now in case of transit and transshipment of stores, let's say there are some stores which are coming from outside India, and then this vessel is going to go to, let's say it is coming from USA, then it is coming to Mumbai, from USA it is coming to Mumbai, from Mumbai it is going to go to Kochi, from Kochi it is again going to go to UK. Okay, then in that case, ultimately the vessel is going to go outside India, but there is a transit which is happening here. So on this also, because the stores are there on a foreign going vessel, on that there will be no payment of duty. Okay, but if this particular vessel is going to terminate here in India, or it is going to get itself converted into a domestic flight here in India, means the journey is going to be terminated, or the vessel is going to be terminated here in India only, then it cannot be imported duty free, then it will be liable for import duty. Are you clear with this? Yes, and yes, in such cases, suppose if you have imported some stores on which you had paid the duty. Okay, now the stores are going to go outside India on foreign going vessel. Then obviously, first we studied that there will be no import duty. But what if you have already paid import duty at the time of import of these stores? Then you will get a duty drawback of this. Okay, normally duty drawback, whenever we get 98% of the tax as duty drawback. We do not have it in our syllabus, but this is the provision. But in case of the stores, you get 100% of the duty drawback. That whatever is the amount of import duty that you had paid on these stores, full of that will be allowed as duty drawback, right? And the last point which is coming here about the supply, second last point, supply of stores, of indigenous stores. Okay, now let's say if there are some stores which are manufactured here in India, we did not import the stores, till now we are talking about importing of stores. Let's say there are some stores which are manufactured here in India, and then we are exporting it, means the stores are going outside India on a foreign going vessel. Then in that case, no export duty will be applicable on export of such stores. Forget about import duty. Here there was no import duty applicable because the goods were manufactured, stores were manufactured here in India. So when these stores are now going outside India as stores only, okay, then at that time there will be no import duty, no export duty applicable. Right? And then last section under this particular series, that is, see, no, I just now told you that if there are any stores which are going to be consumed here in India only, okay, on such a vessel which is going to terminate here in India only, for that import duty will be payable. Okay, but if these stores are going to be used on a navy vessel, okay, on any Indian navy vessel, okay, then in that case there will be no duty applicable on the same. Okay, even if it is in India only, then also there will be no duty applicable on the same. Very simple, everyone. Yes, then going on to the next procedure, which talks about your baggage provisions. Okay, very, very important. Now, whenever any particular passenger is coming here into India, can we say he will be having his baggage with himself? Plus, can he also have some unaccompanied baggage? That is, he has sent his luggage in advance and then he is going to come. Yes, possible. Then, will this baggage also be liable to customs duty? Answer is yes, it will be liable, subject to the baggage rules. Okay, there are certain exceptions which have been provided, but apart from that, the baggage that you are bringing from the other country, on that customs duty will be applicable at the rate of 35%. Okay, basic custom duty rate is 35% on the value of that baggage, and on this 35%, social welfare surcharge will be applicable at the rate of 10%. Okay, so it does not become 35 plus 10. it becomes 35. On 35, 10% is there, that is 35 plus 3.5%, that is 38.5% is the net rate on which customs duty will be applicable. Ma'am, which dates rate? As of now, the rate is 38.5%. Which dates rate are you going to consider? The date on which you are going to file the baggage declaration form. The passenger who is coming to India, he is required to fill a form called as baggage declaration form. And the day when he is filing this baggage declaration form, on that day, whatever is the rate of duty, that will be relevant for determining the relevant date. Okay. Then there are certain items, okay, which we will study ahead. Firearms are there. Then your cartridges of firearms in excess of 50 is there. Then cigarettes are there in excess of 100. If you are importing this in excess of this quantities, then in such cases, these items will be liable. Okay, these are not exempted. These will be liable for custom duty, that too at the rate of 100%. Normal baggage percentage was 38.5%, but these items which we don't want to import, on this import duty will be applicable at the rate of 100%, right? Now let's understand the most important thing from which is relevant from your exam point of view, passenger baggage rules. Okay, now when any tourist, okay, everyone, I'm giving you sequence, learn in that sequence only, or remember in that sequence only. First, remember this one. Okay, if there is any tourist of foreign origin, Firangi, okay, if there is any tourist of foreign origin who is coming to India from any country other than Nepal, Bhutan, Myanmar, okay, then he can bring three things with himself. Three things means I'm dividing into 3 points. He can bring used personal effects. Okay, used personal effects with him. Used personal effects will not include jewelry. Okay, then he can bring travel souvenirs of whatever amount. Okay, used personal effects, travel souvenirs of whatever amount, and any other articles up to a value of 15,000, excluding the articles mentioned in Annexure 1. Okay, so used personal effects, travel souvenirs, articles up to 15,000. This can be brought by tourist of a foreign origin if he is coming from any country other than Nepal, Bhutan, Myanmar. Okay, let's say there is any other person, maybe Indian resident only, or a person of Indian origin only, who is coming from outside India to India. Okay, from any country other than Nepal, Bhutan, Myanmar, then same used personal effects, travel souvenirs and articles, but up to 50,000, excluding those mentioned in Annexure. Okay, so for outsiders, for foreign nationals, the limit is only 15,000, 15,000. Okay, but when any other person is coming, maybe someone, some relation with Indian, that is Indian resident, foreigner residing in India, or tourist of Indian origin, when any of these people are coming, then used personal effects, travel souvenirs or articles up to rupees 50,000, this will be allowed. And last, if there is any person, be it Indian person or be it foreign person, if they are coming from Nepal, Bhutan, Myanmar. Okay, in the above 2 points, it was coming from any country other than Nepal, Bhutan, Myanmar. Here, if they are coming from Nepal, Bhutan, Myanmar, then in that case, they can bring used personal effects, no problem. They can bring travel souvenirs, no problem. They can bring articles up to 15,000, 15,000, no problem. Okay, but if they are coming by land route, okay, because these are the roadways are open. If they are coming by land, they can bring only personal effects. Travel souvenirs also not allowed. Articles up to 15,000 also, 15,000 also not allowed. Are you clear with this? Yes, and whatever limits are there here, okay, these limits are per passenger. You cannot combine the limits of two persons. Each person can bring up to 50,000 or 15,000 as the case may be. Okay, I just given an example in the main lecture. If A is bringing articles of let's say Indian origin tourist is there. So A is bringing of 55,000, B is bringing of 30,000. They are telling that total is 85 only, na, which is within the limit of 50 plus 50, that is 1 lakh. No, this is not allowed. Individually, the limits are required to be checked. Okay, and in all these cases, infant was excluded. Infant means any child up to 2 years of age. Infant was excluded because you cannot bring anything in the name of infant. So only the used personal effects of infant, only used personal effects of infant will be allowed duty free. Are you clear with this? Yes. Okay, so this is applicable basically for everyone. Now, if there is any such person, okay, if there is any particular person who is coming from any country and that passenger has stayed outside India for more than 1 year, Okay, let's say someone is there who has stayed outside India for more than 1 year, and now that person is coming to India. Then he can bring some jewelry. Okay, that person is going to get some jewelry allowance, extra jewelry allowance. See, 15,000 and 50,000, that is separate. In that articles, jewelry will be included. In this particular articles, jewelry will be included. Jewelry is not included in used personal effect, but it can be included in this particular articles. Okay, but apart, over and above that, if someone has stayed outside India for more than 1 year, then if that person is a male, then that person can bring up to 20 grams of jewelry or 40 or value of 50,000, whichever is lower. Okay, restricted 20 grams, but value restricted up to 50,000. And if it is a lady passenger who is coming to India, who has stayed outside India for more than 1 year, then she can bring jewelry up to 50 grams or value up to 40 grams or value up to 1 lakh, whichever is lower. Are you clear with this? 20 grams, 40 grams, 50,000, 1 lakh. This is the extra jewelry allowance only for these people over and above the above points. Are you clear with this? Yes. Then the last one, that is rule number 6. Rule number 6 talks about transfer of residence. Now let's say someone was engaged in some business, someone was engaged in some profession, and now that person is shifting back to India. Then can we say if he is shifting back to India, in this case, then he will need more allowance. So he is given some more duty-free allowances depending upon his time period of stay outside India. If that person has stayed outside India for 3 months to 6 months, okay, 3 months to 6 months, then that person can bring personal items, household items, other than those mentioned in Annexure 1, Annexure 2, but including those mentioned in Annexure 3. So basically, personal and household articles, those mentioned in Annexure 3, okay, other than those mentioned in 1 and 2, it can bring up to rupees 60,000 value. Okay, then similarly, if there is an Indian passenger who has stayed abroad for 6 months to 1 year, then that person can bring same thing, personal items, household items, other than those mentioned in Annexure 1 and 2, but including mentioned in Annexure 3, up to rupees 1 lakh. Then someone has stayed outside India for a period of at least 1 year, okay, at least 1 year. Then in such cases up to 2 lakhs. Okay, provided he has not availed this concession in the last 3 years, then now we can give him this particular concession. Then after that, if someone has stayed outside India for a period of at least 2 years, 24 months he should have stayed outside India. In this 24 months, Commissioner can give him a condonation of 2 months. That is, let's say if someone has stayed outside India, instead of 24 months, he has stayed for 22 months. Means can we say he is falling short of 2 months only? Then that can be condoned by the Deputy or the Assistant Commissioner. Then in the last 2 years, when he had come to India for short visits, his visit in India should not have exceeded 6 months, and he has not availed this concession in the last 3 years. If all these conditions are fulfilled and he has stayed abroad for a period of more than or equal to 2 years, then he will be allowed personal items, household items up to rupees 5 lakhs. Okay, so 60,000, 1 lakh, 2 lakh and 5 lakh. Okay. This is very less tested in your exams, but if at all it is asked, then you should be able to give the answers. Are you clear with this? Acha, then the question arises, can we bring currency with ourselves? So customs law says that we are totally silent about it. Please refer the FEMA provisions at how much currency can you bring to India. Okay, then similarly for unaccompanied baggage, in unaccompanied baggage, generally they say that unaccompanied baggage can come 2 months before you come. Okay, means I was planning, I am sending the luggage today. Okay, I am sending the luggage today to India. When I am sending the luggage, from that day within 2 months, I should reach India. Okay, if due to some exceptional circumstances, it is not possible for me to reach India within 2 months, then this time period can be extended by another 1 year. Okay, 1 year by the Deputy or the Assistant Commissioner. Right? Similarly, in case of crew baggage, okay, let's say if there is any particular person who is working as a crew member, okay, crew member of a flight, etc., you must have heard about this. So whenever their contract is going to get terminated, okay, means when they are going to be finally paid and they are going to be relieved as a crew member, at that time they will bring baggage from the other country. So the above baggage rules will apply to them. Okay, but let's say if there is a crew member who is not leaving themselves as a crew, means that employment is going to be continued. So can we say they travel on and off between multiple countries? So when they are coming from the other country as a crew member, their termination is not yet done as a crew member. So they can bring chocolates, cheese, cosmetic items, petty gift items, etc. for themselves or their family. Okay, for themselves or their family for a value not exceeding rupees 1500. Family includes all the people who are residing in the same house and form part of the domestic establishment. Okay, anyone who is residing in the same house, that will be called as family. But of all these things taken together, maximum how much? 1500. A year we cannot give the limit of 15,000 and 50,000 because they travel in a week, they can travel to multiple places, so we cannot give them bigger limit. Are you clear with this? Okay, then another thing which I want to tell you here, everyone here, annexure 1. Okay, annexure 1, first of all, relevant for rule number 3, 4 and 6. Very relevant for rule number 3 and 4. Okay, the initial thing that we had studied, foreign tourists coming to India, the limit was they can bring used personal effects, travel souvenirs plus articles up to 15,000, but excluding those covered in annexure 1. Similarly, 50,000 excluding annexure 1 and another 15,000 excluding annexure 1. Okay, now how do we interpret this, everyone? See this. Firearms is not included in that 15,000 and 50,000. This is over and above, and that too, this will be taxable at the rate of 100%. Okay, it will not be accommodated in that 15,000 and 50,000 limit. Similarly, cartridges of firearms exceeding 50. Okay, up to 50 will go in that limit of 15,000 and 50,000, but exceeding 50 on that, tax will be payable at the rate of 100%. Then cigarettes more than 100 sticks, up to 100 sticks, you will take it in that column and it will come under that general duty free allowance of 50,000 or 15,000. Similarly, cigars up to 25 or tobacco up to 125, that will be included in your that articles limit. Okay, but anything exceeding this, on that again 100% duty will be applicable. We have done questions on this in the question bank, from the question bank. Similarly, alcoholic liquor in excess of 2 liters. So up to 2 liters will be included in that limit of 15,000 or 50,000. Anything more than 2 liters, that is not allowed. Then gold or silver in any form other than ornaments, example gold bar, silver bar, etc., not allowed. Flat TV panel, not allowed. Okay, means that is not even there in your 15,000 and 50,000 list. Right? Then there are certain items mentioned in this annexure 2 and annexure 3. It is just a one-time read. Okay, not even asked in the exam. So you can just read it once, but don't put the energy to by heart it. Are you clear with this, everyone? Yes, and one more notification which I wanted to tell you. If there is any particular person, if there is a passenger whose age is more than or equal to 18 years, 18, okay, 18 years, then that person can, while coming to India, he can bring one laptop computer, notebook, laptop computer, not a personal computer, not a desktop type of a computer. So he can bring one laptop computer duty free. Okay, this is applicable for everyone other than crew members. Okay, this is applicable for everyone other than crew members. Are you clear with this? Acha. Then after that, going on to the next provision, section number 80 says that sometimes it can so happen that, let's say there is a person who is coming from USA and he has come to India. He has got some baggage with himself, which is a prohibited item. Now, if it is a prohibited item, we cannot allow that to be entered into India. Either we will confiscate it. Okay. So here the passenger who is coming can request it to the Indian Customs Officer that, sir, you please keep this prohibited item with you till the time I roam in India, and once I leave India, at that time I will take these goods back with you and I will take it back to my own country. Okay, so in this case, these goods will not be confiscated. There will be no duty also payable on the same, because the value of this prohibited goods is very high. So the passenger himself is not willing to pay any duty on the same. So this is just one way out by which the duty is not required to be paid. Okay, yes, so this is all about your baggage rules. Yes, baggage rules at first table of 15,000, 50,000, 15,000, then jewelry allowance, 20 grams, 40 grams, 50,000, 1 lakh, and then that annexure 1, number of cigarettes, number of cigars, etc., that is relevant. Okay, at least do that much, and yes, don't forget about laptop. Okay, don't forget about laptop there. Are you clear with this? Yes, then going on to the last provision, that is of transit and transshipment. In transit, you already know, let's say there is a ship which is coming, or let's say there is a particular conveyance which is coming from the other country. Now here in India, it is going to touch one of the ports. Let's say it is touching Mumbai port, and after that the same conveyance is going to go to the other country, let's say Sri Lanka. Okay, so in that case, can we say if the vessel, if the conveyance is not changed, If the conveyance is not changed, some goods will be unloaded here in India, balance of the goods is going to go outside India. This is called as transit of goods. Duty is going to be payable only on the goods which are unloaded here in India, right? The bill of entry is required to be filed only for those goods which are going to be unloaded here in India. But yes, import manifest is going to contain everything. Okay, import manifest will contain everything. Then similarly, in case of transshipment, okay, or one more example of transit. Let's say conveyance from USA is going to come to Mumbai. From Mumbai it is going to go to Kochi, and from Kochi it is going to go to Sri Lanka. Now can we say it is touching multiple ports here in India? No problem. Okay, even this is allowed. So in this case they are telling that whatever is getting unloaded in Mumbai, for that custom duty will be payable in Mumbai. Okay, if Kochi comes under the notified ports of the government, then in that case duty will be payable in Kochi. If Kochi does not come in a notified port, then duty of that will also be payable at the Mumbai port itself. So basically whatever goods are going to be unloaded here in India, duty on that has to be paid here in India on the respective ports. Are you clear with this? Yes. Then the other one is about the transshipment. Okay, what do you mean by transshipment? Now let's say the vessel, let's say ship is coming from USA and it is coming to the Mumbai port. Okay, for example, it is coming to the Mumbai port, and then once the goods have come to Mumbai port, after that we are going to transship. That is, we are going to change the ship. We are going to transfer the goods from one vessel to another vessel. Okay, and then the new vessel is going to go ahead to the other locations. Okay, this is called as transshipment of goods. Okay, this is called as transshipment of goods. Are you clear with this? Now, whenever transshipment is there at that time, and suppose if there are no goods which are going to be unloaded here, which are going to be cleared here in India, then in that case, even though vessel has changed here in India, there will be no customs duty applicable on the same. That is, transshipment will be allowed without payment of duty. Are you clear till here, everyone? Yes. What if some goods are unloaded here in India? If those are unloaded here in India, then on that customs duty will be payable. Then after that, going on to the next one. Next one is important, last section, section number 56. Now, there were two circumstances. Okay, I had just given you this example in the main lectures. This diagram is just for the purpose of reference. Now, let's say if from West Pakistan, this they were talking about before partition thing, etc. From West Pakistan to East Pakistan, that is Bangladesh, if they wanted to transport any goods, okay, then instead of full going from year to year, what they did was they used India for the purpose of transportation. So they said that origin was also outside India, destination is also outside India, so this transportation can be allowed. This transportation can be allowed without payment of duty, no problem in that. Okay, similarly, when you want to transport from Jammu Kashmir to Tamil Nadu, for example, okay, from Jammu Kashmir to Tamil Nadu, and that you have done it from outside India, for that purpose also, ultimately the goods remain in India only. So for that purpose also, transportation can be done without payment of any customs duty. I hope this is very, very clear to you, and we are done with the entire chapter of importation and exportation, and yes, we are done with the revision series.